Welcome to Charts Today. My name's David Linton, and today's edition for Wednesday, the 16th of May, comes to you from London. And the dollar jumped very sharply yesterday, and we're seeing now that we're back into bullish territory. Kind of what we thought here. We thought this would be a short-lived trend with the medium-term trend strengthening. So, dollar strength back on the cards here, and we've got quite a lot of upside targets, and the short-term downside target has been removed. We've still got work to do on the long-term chart, but the dollar is looking like making a strong recovery still. Euro then weaker on that dollar strength, so bearish on the medium and short-term chart. And the Japanese yen, where it's really been showing up, the dollar weakness, dollar strength yesterday, that yen weakness just showing through, and this transition occurring on the medium-term chart for the yen. So looking pretty strong there. Looking at sterling, weaker again on that stronger dollar, sitting at 135. We've got a downside target of 133.60, so that's another 1.1% lower. And against the euro, sterling actually looking relatively strong on the short-term chart, and on against the Swiss franc, sterling weaker. So we're just seeing a mixed picture generally. Against the Aussie dollar, sterling has just tried to get back above the short-term trend, but again, just flat at the moment at around 180. Bitcoin falling further, still bearish below the cloud on the short-term chart, just struggling on that medium-term trend to get through on the lagging line. So still further downside potential. Big downside targets here, 6,100. That's a further 24% downside potential for Bitcoin. So not really finding a floor yet. US market stocks last night. We're looking at the S&P 500 index. It was down about 2/3%. So still hitting some turbulence here. Medium term, we're just not quite clearly through on the cloud, so that's still an issue. And on the Nasdaq 100, we're seeing much the same thing. We're down over 1% overnight. Still bullish in the short and medium term charts, but a bit of a sell-off there last night. Looking at the Dow, also further sell-off there as well, just under 0.75%. And if we look at the Russell 2000 index, this has been the stronger of US indices, fairly flat on the day, still just nudging those all-time high levels. The S&P future is very little change this morning, just heading into bearish territory here, and the Nasdaq E-mini future very slightly down, but again, it's more that we've just headed into bearish territory here with yesterday's move. So it'd be interesting to see how the market opens, but it's too early to say with these changes how that will happen. Looking at the FTSE 100 index, we are again fairly flat this morning, so no real change there either. And the FTSE 250 also flat. Looking at the Xetra DAX, we're just up 0.1%, so looking a bit flatter here too. The CAC Quarante has been the strongest looking index, just still nudging this January high, not quite making it to new all-time high territory, but still probably the strongest European index. Looking at the Japanese market, down about 1/3%, just struggling to get through on the cloud on the lagging line here on the medium-term chart. So just a mixed picture there. Hang Seng also was up about 1/3%, very flat, no change, actually 0.03%. And Chinese stocks just down slightly, still bearish in that medium term, and that long-term chart is still a little bit worrying for China. The Sensex was also down about 0.5% overnight, holding onto its bull trends, and the Australian market actually was up just very slightly. And again, just nudging the levels that we saw back in January, but not quite through yet. Looking at Brent Crude, we're still holding the $78 level, so the strength being held. We're still bullish on all three time frames, and upside targets of some 5 and 6% now on the short-term chart. WTI, much the same picture, and if we look at US nat gas sitting at 2.82%. One of the big moves yesterday was in gold. Gold actually fell below $1,300 on that stronger dollar and also stronger bond yields, which we'll have a look at in a second. But we're seeing here gold has just tipped into the bearish territory. That did happen last year before we ran higher. So we saw here at pretty much the same time we had a sell-off and then the summer run. So it's too early to call the trend in gold over. We saw it again where we do have these momentary breaches on the cloud. So we are just cautious at the moment, but still have lots of long-term upside targets. This potentially gives us a new ability to line up a new thrust target on the short-term chart as well. Taking a look at silver, of course, it's followed gold to bearish below the cloud as well. Just hit the target there at 1626, and we're just now bouncing off that, so it'll be interesting to see. But quite a few downside targets here, causing some concern for silver. US Treasury yields was the big story yesterday. They had their biggest jump in over a year. March last year was the last time we saw a day of this strength. You see here on the chart, and we hit 308 at one stage, 309 yesterday. So really clearing this 3% level now pretty clearly, and no clear signs on any of these charts where the next upside target is, so quite key that. Looking at Apple, we saw Apple just falling away in line with that Nasdaq decline of 1%, down just under 1%, and pretty well across the board. Tech stocks were falling yesterday in the US. We saw Amazon down 1.5%, just hanging on to its short-term bull trend, but just. Google was down 2%, and we've said that Google is the underperformer of tech, and that showed through yesterday. Facebook also came off quite a bit yesterday, down 1.25%, so just in line with market, just a little bit more than the Nasdaq. And Microsoft was down 0.75%, so not as bad as the sell-off that we saw in the overall tech index. But for the moment, tech's just taking a pullback. It'll be interesting to see how markets digest a lot of geopolitical news at the moment with Korea and China trade talks. So it'll be interesting to see how markets move forward in the next few days. That's it for today. Until tomorrow, happy charting. See you then.